Hello to all of you. My name's Scott Picken. I'm the CEO and founder of Migrate. I've known Ken for a long time. And, Ken, I think one of the things that's fascinated me, you've gone right through the industry, 30 odd years in yachting and shipping and everything in between. And you're a super yacht captain. And I remember talking to you and you explaining to me the challenges that people in the yachting industry face when it comes to investing. Do you want to highlight some of those frustrations and challenges that yachties face?
Well, typically, the crew would be working all day, and then they'd have their dinner, and some would go to bed, but most times it's a time to leave the boat and go ashore and hang out in yacht bars and party, and there's just no time to think about what should I do with my money. I know I was terrible. I had my money in a bank in London for years and never made a penny for me. So I've met you and I've come across this investment thing. And when you asked me to open Yachties and Wealth, it was actually on my mind all the time because I felt I had this knowledge and I wanted to share it with my boat crews. So it's all worked out pretty well. And yeah, that's the biggest thing time-wise. I mean, guys on boats work hard and they haven't got time to go and wander around speaking to financial advisors, and which in any case just take your money and buy an ETF in America, and they could buy it at the wrong time even. So it's the returns are much lower than what you've always told me you want the top. What did you say? The top 10%, the general public to be able to earn what 1% of the world typically.
Oh, exactly. I mean, look, the 1% of the world owns more than 50% of the world's wealth, and their assets continue to help them just get wealthier and wealthier. Why don't we just help everyone invest like the top 1%? That's kind of the metaphor that I like to use. It's so interesting you talk about the challenges yachties face. I remember nearly 20 years ago when I set up this business originally in London, and I was helping a gentleman who was working on the yachts, and he was leaving, and I'm not going to try to sound like a yachty because I'm not, but he was leaving America and coming across the Mediterranean, and I had to help him get a mortgage. He was trying to buy a house, and I had to help him get a mortgage, but while he was going across the Atlantic Ocean, and it was quite complicated actually, because he didn't have internet in those days, while he was between the two different continents, and we nearly lost the sale of the house. Now you add the complexity of trying to manage the house and broken toilets and maintenance and everything in between. And I think that's why so many people, like you did, Ken, sit on their hands, and I don't mean that in a negative way, but not knowing what to do, so they just leave their money in the bank,
Yeah.
Tell me from your perspective, how did you change that? So you and I met and you started to understand, okay, well, I can invest like the top 1% as long as I've got access to the right information and the right partners. What difference did that make for you now that your money wasn't sitting in a bank, but it was actually starting to work for you?
Well, personally, I bought a house for cash, but I still have some extra cash left. And I met you, and I started reading up your deals and the way you do things. And I did one investment, and you see the money coming through, and it's all exactly like the platform says, and it's all working, and it's just wonderful.
I mean, just to show you there, and I kind of want to just reiterate what Ken was saying. So I actually just got back from America, and I've got a whole bunch of opportunities here that are actually live investment opportunities. So as an example, there are these two industrial buildings that we invested in America. And you can see here that they're just paying every single month. So you can see two different deals every month: August, July, June, May, etc. That's one partner. This is another partner, which is multifamily. Every quarter, they're paying about $6,500. This here is, I don't know what that one is, but this one here is McFarland. This was an opportunity where they buy buildings and they sell them. So we got paid in Q3. There's another one coming in Q4 and another one in Q1. Then this year was an office building that we bought in the middle of COVID. It's also paying us about $6,500 every quarter. And then we got a special dividend there. And I was actually just sharing this off camera with Ken because it kind of sums up what he's talking about, where, whether you're on a yacht or whether you're sitting on your couch, your money's working for you while you're sleeping. You're not out there trying to manage a property or fix the maintenance or worry about whether your tenant's paying, etc., because it's commercial property. And so you've got partners on the ground that are actually collecting the rent and then distributing to you, which is what I call proper passive income. And I think that's what
What I
you're.
also what I also like about it, it's not linked to the stock market. So you don't have these big volatile swings going up and down all the time. So, and every time that happens, shall I sell now? Shall I sell? Shall I wait? Shall I hold? Shall I sell? So you don't have that. And these returns on average are, I think some of them are even better than the stock market.
Well, I mean, look, we can go into that in more detail, but I mean, if I was to show you right now, and obviously you might be watching this video a couple of months, these specific deals won't necessarily be live. But I mean, we've got a private equity opportunity in London that's about a 25% return. We've got a debt opportunity in Austin, Texas, that's just short of a 9% income return. We've got an industrial logistics opportunity in Phoenix, America, that's got a 16% total return, of which 6% of that is cash income. And then finally, we got a mixed use opportunity in Germany with a total return of 16%. All of these are per year and they net of fees. And then you've got about a nearly 7% income return in your pocket. And I think I'm just kind of pointing out what you're saying, because the stock market on average, the S&P 500 is getting about 8% a year and has done for the last 25 years. And so what you're doing here on average is you actually are outperforming the stock market without a lot of the risk.
Yeah, that's what I like.
The other thing that you asked me, Ken, that I think is relevant to just talk through is people sort of say to us, what about the risk? Okay, it sounds too good to be true. What about the risk? Well, a couple of things are important. One is that we FCA approved, so that's out of the UK. We're a juristic rep, which means we work with someone's license in the UK. We work with Lemonway, that's the biggest digital wallet provider in Europe. They've got 8 million different wallets. It's a defined financial product. We've got phase protection, which is based on money laundering. We've got European cash custody. We've got multi-layered compliance, so there's many different layers of compliance. We've got transactional wallets. I'll talk to that now, but in simple terms, each of you has your own wallet. And we've also got data protection and investor database ring fencing. So this all sounds like complicated words. What does it mean to you as the investor? In simple terms, how do we keep your money safe? The first thing is we've got external cash custody. So what that means is that if we were to disappear tomorrow morning, your money is sitting in your digital wallet, which is run by Lemonway, which is a completely third-party company. So if we were to disappear, your money is 100% safe. Secondly, we've got discretionary portfolio manager governance. So what that means is that, again, if the company Migrate or Yachties Wealth was to disappear tomorrow morning, the deals are still being managed by an external third party. Thirdly, we've got designated investor accounts. So what that means is that when Ken invests directly in a deal in Phoenix, even though our platform facilitates the process and makes it a lot easier, if we were to disappear, Ken is still invested directly in that deal in Phoenix and still owns his investment. And although it might be more tricky because you don't have the nice technology platform in the middle, you still would 100% own your investment and you would still get all of the returns that were due to you by investing in that deal. The fourth thing is ring fence deals. So what that means is that if you invest in 10 deals, the chances are 1 or 2 might not go according to plan. You can't rob Peter to pay Paul. So if one deal doesn't work, it can't take down 3 or 4 other deals. So you've got complete protection from one deal to the next. The fifth one is designated corporate members. So again, outside of our company, if we were to disappear, each one of those investments is run by third-party corporate members, which basically means directors. External custody of investments, same thing. If we were to disappear, the gentleman that runs and the company that runs the license, the FCA license out of England, would still manage and look after the deals. So even if we were to disappear, the investor is 100% protected in terms of investing in the deal. And finally, operational and investor segmentation. It's a similar thing, but slightly different. As in our management team, if they were to disappear, the investment side of the business is separate and bespoke to if we were to disappear, the investors are still investing in the deal. And then the question that I get asked, is, okay, well, that sounds wonderful, but what are the risks? Because there's always risks if you invest. Even if you leave your money in the bank, there's still risks with regards to that. And in simple terms, the risks are no different from investing in any normal deal, any normal property deal. So as an example, in real estate or property, if the interest rates go up, there might be problems. Or if the tenant stops paying the rent, there might be problems. But that comes down to a level of due diligence. And I don't want to go into all the detail, Ken, although people can follow up with us, and I'm happy to take them through our entire due diligence process. But my point being is that in terms of a simple risk and protecting your money is 100% protected investing in the deal using our platform. The risk that you need to take into account is, are the investments good quality? And that will be the same whether you're using our technology or not. We do a lot of due diligence to try and make sure we got the right partners and the right deals, the right investments. But obviously nothing's guaranteed in terms of the deal performing. But I think it's important to understand the difference between the two. And the final slide that I wanted to show you, which I think is very relevant, is this slide here, which just visualizes what I just said to you. So you're sitting here with your investment bank account, might be Lloyd's in London or Wells Fargo in America. Each one of you has your own digital wallet. So you have your own, basically online bank account. You then go to a digital marketplace. So in this case, it's Yachties Wealth. You then bring up a number of deals. So as an example, I just showed you 4 deals that are live right now. You decide you want to invest in one of them. I don't know, let's make it up. The Phoenix Industrial Building. The technology aggregates all the investors together. Then you go through a tax-efficient vehicle. Just by the way, if you invest on your own in America, there's 30% withholding tax. So the tax-efficient vehicle makes sure that in the most tax-efficient way, you effectively don't have to, you're being as tax-efficient as possible legally. And then you invest directly in the deal. So that's what I was trying to say earlier. If Ken invests directly in Phoenix, even if we were to disappear, it doesn't matter because Ken's invested directly in Phoenix. When it plays an income or a capital growth, it comes out into a deal wallet. And then from that deal wallet, it's distributed into your own personal wallets, which you're in complete control of. You can reinvest the money into new deals. You can take the money out. You can go on holiday to Disney World. It really doesn't matter. So I know it's a little bit of a longer explanation, Ken. I apologize. But I know that people really, in my mind, when I meet investors, there's only 2 things they want to know. One is, does that income come in while I'm kind of sleeping? And that's what I try to show them. And secondly, how is my money protected, which is what we've just tried to answer.
Perfect.
Could I ask you a final question, Ken? Having been in the industry for over 30 years and having experienced this, and now you and I in collaboration with Yachties Wealth and wanting to launch and share the message with other yachties, why should they pay attention?
Because otherwise they're going to do what I did. I did nothing for years. And they should really, really look into this.
So in simple terms, you can look below here. You can see there's a chat box to be able to talk directly with Ken and understand, from his experience. There's a brochure if you want to go read all about it, or you can literally click on it and go through and start browsing the investment opportunities. But I think if there's one thing, Ken, I've learned having done this now for 28 years, the difference between people that get results and the people that don't is the people that don't always have excuses. And the people that do tend to take the action and take the next steps. And so my strong guidance, whether you want to invest or not is a separate conversation, but at least try and learn and listen to people like Ken that have learned from experience, and he's providing you with an opportunity. And at least if you look into it, then maybe, it can have a significant impact in your future in the future, like in the years to come. So I just wanted to share that with everyone. Ken, I deeply appreciate our partnership. I love the fact that you are sharing this with yachties around the world, and I look forward to us working together and helping get them the results.
Fantastic. Thanks, Scott.